Alrighty, guys, we're back with the second video of the evening. Because I need to do a better job with the plan for the next trading day, and specifically for myself as well. I think after, so many years or however long of doing this, you kind of have, it's a little bit more of an art form. But the problem with that is you can let things slide. And so that's where you get into trouble. Let's go through some of these plans here. So let's just go through the indexes. So the Russell 2000, let's go over to the futures chart here. So, yeah, anything above here, above this trend line, I would go for, but not here. I mean, again, this could work out perfect, right? I'm not trying to pick bottoms in my strategy. That's not what I go for. But, this looks good. Yeah. Yeah, again, we've talked about the Russell 2000 lagging so badly, and that just really has to do with high interest rates. I think that is the main driver. Because 40% of the companies in Russell 2000 have exposure to short-term debt. Well, have exposure to short-term debt in the sense of that it'll impact, their earnings. Because basically every company has exposure to short-term debt, but not to the level of impacting their earnings and their balance sheet so heavily as to why they would underperform so big. When we're in a bull market, this bear market has been a nasty bear market last year or 2 years ago, 2022, I think it was. Oh, shoot. Dang, time flies. Yeah. Yeah, 2022. Some people want to call this a bubble or whatever, and it totally could be. I haven't seen any indication that would point to it being a bubble, but again, what do you have working? You have working, technology plays, artificial intelligence plays. What else has been working? Defense contractors, yeah, construction has been working. But I think that has to do with other factors other than a red hot economy. But regardless, it has been working. It's not like a full-on amazing breadth of a bull market, but this isn't the first time stocks have seen something like this. It is kind of the first time I've traded a stock market like this, where you have particular sectors that are, in clear, crazy bull markets, and other sectors that suck. But this is not the first time in history at all that this has happened. So it's not unprecedented at all. Okay, so let's go through the plan here. NASDAQ, so again, I got in NASDAQ, long NASDAQ today at some point that we went over in the previous video. I'll plan to hold that. Again, I mean, we have about 8 days or so of consolidation, which is nice. That's awesome. You know, it could still consolidate, but the 50-day moving average has moved up, and we're in a bull market. So as this is working, I will add to this. How will I know to add to this? We should probably go through. That. So these are trend lines that I have drawn. This is kind of the most bullish trend line. This is kind of like the oh shit trend line. Yeah. How will I add to this? Yeah, see, this is good. This is something we should probably go over. There we go. That's how we'll do it. 482, 483, 485. We'll add to this. If it works. So that's NASDAQ. And let's go over to Dow Jones. You know, kind of same thing, right? You know, strength has been sold, so I'm a little bit cautious, you know. It's not like I'm eager to add to this. Although I would love to add to any of these positions that I'm in. But we have 2 days in a row of strength being sold pretty heavily. You know, very heavily. So then I look for, is there any precedent to this? And nothing that I can really find. You know? Have you seen any price action like this during this bull market? No. You know? So that makes me a little bit concerned. What, like here? And this was just one day, right? You know? However, we've been in a few months consolidation in Dow Jones. The 50-day moving average has been moving up. So we'll hold on to this. And again, until strength has not been sold, then I'll add to strength, right? You know, so strength, boom, 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 add to strength, right? Strength starts getting sold. You don't add to strength. And then when strength starts getting bought, you know, you kind of add to it and go from there. So we went through the Qs, Russell 2000, you know, S&P 500. Yeah, again, you know, what is this? 1, 2, 3, 4, 5, 6, 7, 8. This would be the 9th day today, because this is a futures chart. So again, if this can work, and again, you know, I have no clue if it's going to work, right? You know, you don't need to know if it will or if it won't. You have a particular trading plan or a strategy, and you trade the strategy, and you don't need to know if something is going to work or if it's not going to work. That doesn't matter. It's not like some crystal ball, right? You know, I'm not Nancy Pelosi out there affecting policy, right? Like, you know, who knows if it's going to work or if it's not going to work. But again, if this can work and continue to move up, this amount of consolidation can support another move higher, So let's go through some of these charts really quick because it's getting late. And last night I was at a birthday party. So I went to sleep really late and pretty tired. So we're in the communications ETF for the S&P 500. I mean, clear uptrend. You know, so a candlestick like this is never good. You know? I mean, that's never ever good. Right? But just because you get one negative signal, it doesn't mean jack shit because you know, there's 1,000 different signals that you could harp on and get stuck in analysis paralysis. I mean, let's see. Okay, so for example, so here, boom, you see this candlestick? Yeah, that's a bearish candlestick. Let's look back. When else has this happened? Back here. Right? Bearish. There's not a single thing that is like, this is a good candlestick. Nowhere will you ever see this is strong price action, because, I mean, it's not. You know, it closed at the absolute low, strength got sold the whole time. Right? But what if you just closed out your entire position because of this? You know, you would miss this whole thing. So, you know, communication ETF, S&P 500, all-time highs. We're in a bull market. This sector looks fine. Do I have any plan of attack here? No, I don't. So take all that with a grain of salt. So we'll go through consumer staples. And this is not an indicator of anything. This is in a trading range for a couple years, as you would kind of expect it to be. And a little bit, I kind of have this secret thing where, like, you know, what if the consumer staples that we've been taught were staples for 20, 30 years actually turn out to be crap? You know, well, when people start realizing that they are, in fact, should not be staples, you know, I think that would be really good. So, you know, so anyways, this is another sector in the S&P 500, you know, consumer staples. Kind of typically seen as more of like a safe haven. So, you know, again, there's people that put this into their trading strategy. I never have. So, you know, again, I mean, take my opinion with this with a grain of salt. This isn't something I've ever really paid attention to and have never traded off of. So, you know, if I'm not placing any real money on any of this stuff, then, you know, the opinion is kind of meaningless, right? You know. So we'll go over to financials. This I do have money in, so my opinion matters. Yeah, this chart looks good. This looks fine. It looks okay. It's kind of rolling over. But again, I mean, is this consolidation or is this the top? You won't know until a month, right? So while it still continues to look fine, I will treat it as it's fine and in an uptrend. You know, I mean, yeah, it looks pretty sketch right here and kind of suspect. But again, I mean, this is a serious amount of consolidation. Could it be the top? Yeah, it totally could. Is this a topping pattern? No, it's not. But again, you won't know. Is this a flagging pattern or is this a topping pattern? You know, like a bull flag? Or is this some sort of topping pattern? You won't know right here. But we're in a bull market, so you treat it as such. Or I treat it as such. If you want to go against counter trend, that's fine. I'm not wired that way. Because, yeah, I'm not. But yeah, I mean, could this be rolling over? 100%. Has the Fed's stress test come out and been worse than it was last year for banks? And in fact, it is. Is that Japanese bank kind of failing with 500, half a trillion in assets under management? Yes, it is. Was 2023 or 2022? Whenever it was. Let's go have a look-see. Oh, wow, March. Yep, that would make sense. March. That's typically when banks fail. Maybe we could do another video on that. That'd be cool. But it's not like I have any extra knowledge on that. But anyways, banks typically fail in March. That's when they got to mark to market their losses on their balance sheet. So, it makes sense. Anyways, do I really think the banking crisis is over? No, I don't. But that's specifically because of commercial real estate and bonds. Now, who has the largest exposure to commercial real estate? It's regional banks. And it's not even close. And look at regional banks, they're fine. So again, it's like, does my opinion matter? It doesn't matter at all. At all. And they have huge bond exposure, right? I mean, bonds are just debt. That's all it is. It's debt. So, and this is acting okay. So, anyone that's calling some sort of banking crisis is fine. I'm not disagreeing with that because I tend to think, have we really seen the worst of it? But I've been thinking that for an entire year. But just because that's what I think about, it doesn't really change anything. I mean, imagine if you thought AI was a complete bubble and NVIDIA was overpriced. You would have missed this entire move. Just because of your opinion. Oh, it's too expensive. The PE ratio is like $1 bajillion. You're paying for like 1 million years returns, forward returns, right? Most expensive in history. AI's crap. AI sucks. Imagine if, that's your opinion. You'd have missed out on this whole thing. So again, it doesn't matter about your opinion. It doesn't, So again, I mean, you kind of treat it as the trend. So that's what my plan is. So we'll move on to industrials. Yikes. This is something not good. Right here at support. I wonder what's in industrials. This is what I should probably look at before we... Yeah, see, this still looks fine. What's John Deere's? Is it JD? No, that's JD.com. John Deere. I don't freaking know. Is it DRE? No, it's not. You guys are probably yelling at me in the screen. John Deere. Whatever, industrials pave. Infrastructure ETF. Jeez. Maybe a little gap to fill there. Again, so, industrials, do I place any emphasis on this? Not really. I have no money in this, so like my opinion doesn't matter. No, it doesn't matter. Moving on. So real estate. So this will be an interesting one. And this actually looks okay. My goodness. Because I personally know from a couple different markets that real estate is an interesting one. And kind of like the economy right now, right? So if you think about it, it's nothing that crazy. So you have certain pockets of the economy where real estate is doing good. Certain pockets where it's not doing good. Like Florida, for example. Houses have been really sitting on the market in Florida, in South Florida in particular, which is surprising. But then if you're really intrigued, like I am, so you start digging into why that could be, so insurance pricing can play a factor. People want to talk about how there's no inventory, right? So you hear like politicians, no inventory and all this crap. It's like, dude, most of these people have gotten their houses when their mortgage rate was in the low single digits. So now if you're going to get a mortgage, it's like 6%. So you're going to pay 3 times as much. So it's like no wonder why there's low inventory, right? It's not like that hard of a concept to wrap your head around. Let's look at this, home builders. This is something I don't have written on here. And what in the frick is this? You guys see, so I don't even know when I put this alert here. A long time ago, I guess. Well, I guess not that long ago, right? It couldn't have been longer than here. Yikes. Why the heck is home builders doing so shit? That's a little alarming. Well, if you're pretty crazy, you could take a stab at it right here. 9852. You got set your stop loss below this, but that would have to be a monthly close below that. And when I say you, I'm talking about me. Huh. Wow. That is a wow. God. So if commercial real estate and residential is getting like that, but again, there's certain pockets where, like certain pockets in California that are popping. And if a house is priced right, and I do know this firsthand, there is such high demand for them. It's not like there's no demand. 'Cause there certainly is demand. If it's priced right, for example, I'm not going to say like exactly where, because it doesn't matter, but if a house is priced right, maybe slightly undervalued, where you got to sacrifice a little bit here and there, slightly undervalued, from a single weekend, you're getting 5 offers on that house. And I do know this. So, is residential like that screwed, or is it just certain pockets of it that are? And I think it is certain pockets of it that are, and same with our economy as well. But again, this is not something that is unprecedented. It's not something that's good. But again, I'm just thinking out loud here. Okay, so let's move on. We got a bunch more to go through. My goodness. Again, I have no clue, right? Is this thing capitulating? No, it's not. I have no opinion on this. There's no opinion. Is this crashing? No. Let's say, for example, for my certain strategy, if for some godforsaken reason I was in this, I would be selling around here. But that doesn't mean anything, you know. Let's move on here. So energy. So energy would be good. Oh my, what the? I had drawn a trend line here. Freaking long ago was this? 2 trading days. Got blasted right off the 50. Got supported right here. 21-day moving average. None of that is, surprising. Looks like a Devon. That looks really good. Let's write this sucker down. Devon. Or it's like Devon. I think it's Devon. Yeah, look at this. Boom. Trend line broken. It's been bought right at this trend line. Holy moly guacamole. Yeah, this is sweet. Since we're in here, let's look at oil. I can see a pullback here. And if there's going to be a pullback here, Devon, it's also going to pull back. Let's look at this on a weekly chart. Sweet. Epic. Yeah. If this can go up, this would be cool. Again, oil and gas is awesome, right? Using energy is awesome. There is a direct correlation between an advancement of a civilization and its energy use. So using energy is good. That is something that should be celebrated, right? You want it to be as clean as possible. But, stomping out energy use is dumb. Healthcare got blasted today. That was probably United Health. But again, does this look bad? No. Right here, why would this look bad? It's uptrending. This looks bad, right? But is this another consolidation for another leg higher? Just in time for bird flu or whatever, swine flu. I don't know what we're on. Alrighty, we're moving on here. Moving on. Materials. Yeah, see, materials got blasted, right? Yeah. Yeah, so things are really starting to get sold. But again, okay, so let's take this for example. What are you going to let this dictate? This whole thing in here? You're not going to buy stocks just because this hasn't been working here and in the past it was working, right? It's never a cookie cutter situation. And again, I don't particularly think the economy as a whole is doing well. I tend to believe certain sectors are doing well. So I'm going to bet on those sectors. Technology. Okay, here we go. Technology. Look. Is this fine? Yeah. What sector have we? What else are we in? Okay. So utilities. I don't even. And it means nothing. Absolutely nothing to me. Yeah, I just don't care. And again, just, you know, I mean, if you guys have a certain strategy based on this, that's cool. That's awesome. I don't. So like, what looks the worst here? You know, utilities look fine. You know, I would say that the real estate doesn't look good. That's a little concerning. Yeah. What's this volume? But let's go over to FedEx. Yeah, I mean, what the frick? Bam! Blasted. So, let's look at Coinbase. Let's see if there's a play here. Not yet. Not for me, not yet. But I could totally see people going long here. Coinbase. Dang. You guys, see? If we get a close above that, that would be bullish. Again, is it a guarantee? No, of course not. You know, not at all. Yeah, I remember being long Coinbase like way back here. That was like when Tesla was ripping, and Nvidia too. Yeah, I remember way back here. I was literally long like Coinbase, Tesla, and Nvidia. 2021. Coinbase, Nvidia. Dang, way back here. Yeah. Yeah, it was. Yeah. Yep. And then Tesla. Mm-hmm. Again. Yep. Right around here, 2021. This whole area. The thing that kind of tipped me off to that was home builders, actually, which is interesting. Yeah, it was the home builders that had closed below 2020, below the 50-day moving average. I thought, and then I got blasted right here. How long was this home builders bull market? So let's say from here, 2020, July, 2022. This, let's say the bull market, it ends right here. A difference of a few days, or maybe a week or two. Oh, fuck, where are we? So July, let's just say July 1st. July 1st, 2020. So 2 years. A year and a half. Okay. So where are we here? Let's say this massive gap up here starts. You could say, all right, strength has just been booming. Okay, so November, middle of November, 23. Where are we? Seven months. So, not as close. So again, okay, I'm getting so sidetracked. See, this is a problem with doing these videos late at night. I'm just tired, ready to go sleep. So gold. Do I think this is in a massive uptrend? Yes. If you have, physical gold, I should speak for myself, am I in a rush to sell it? Like, no. Yeah, I mean, if this could move another leg higher, that'd be so kick-ass. Huh. Hmm. Again, I mean, am I going to buy anything here? No, I'm not. It's below the 50-day moving average, and that's not my style. Um, I have exceptions to certain things, like with indexes down here. I was buying in here. Yeah, so somewhere in here I bought in here or something, and I remember selling here or something, and then it just started ripping up, and I'm like, you idiot. So anyways, I kept buying. So again, this is below the 50-day moving average. So there are certain exceptions, right? And Bitcoin, for example, I did that today. But generally speaking, like I said, 90% of the time, I'm not going to buy below the 50-day moving average. There are certain exceptions, but for gold, I'm not going to do it. Silver, silver does look a little better. Yeah, this looks sweet. I mean, if this can gain momentum over 30, let's do this. Yeah, so here we go. So here's another. So you guys, I'm just going over like, my thought process, and this is completely off the cusp. So let's get this 2706. So oh no, wait, just create an alert. Yeah. So create an alert. Right? RSI. Yeah, sure. Yeah, over 27, yeah, I'll go for this. And we'll see how it goes together. So we went over wheat. Wheat still looks good. Yeah, I could see it going below 580 and bouncing back up, or failing. Maybe completely gets rejected off of this. There could be some sort of bear trap below 580. I guarantee you, there are so many people that have the stop loss below 580, so you could potentially see it, going down a couple points below 580, just to get supported. We went over oil. Yeah, so oil is something I look to go long. I saw somebody today that was saying something like, when the price of oil goes up, it's good for bonds. That's something I've never ever looked into. And maybe I'm a complete idiot for not knowing about it. Who knows? That's a good trader. Let's look at the chart real quick. Okay, let's go over to bonds. I don't know. Can you make that assumption? Maybe. I haven't looked into it. I'm not going to waste everyone's time with that. Gold, silver, wheat, oil. Lean hogs. But again, what are you going to do with lean hogs? Oh, that's copper. Wow, this could be good. This could be really good. What is the ETF for copper? There it is. Oops. Let's go Let's go to the daily. So if you were to play this, where do you get out? Right? Where's the risk? Where's the risk? Down below here? This looks pretty sweet. CPER. So we've got Devon and CPER. Yeah. And that's it, I guess. Yeah. Like candle. What else do I look at? So, Japan. Okay, Japan. We'll end it here. What the frick? freaking Japan, man. Where was it? It was somewhere in here where I did great with Japan, or maybe it was up here. Who knows? And then I've gotten chopped in and out for a million years. Look at how long this is. March until now. Where were those calls that were expiring? This is before I did these videos. I forget where all those calls were expiring. That was the one where there was like $6 trillion in calls expiring, options expiring, I mean. It was like somewhere right here. Something like that. Yeah, it was probably June 24th. Oh. But anyways, yeah. So Japan, okay, so again, here's another thing. Here's a perfect example. Perfect example. So the Japanese economy has been in shambles. The central bank can barely even hold their currency together. It's just an absolute mess. And so, like, let's just say that your opinion is, and rightfully so, is Japan sucks. Or their economy. And rightfully so, right? Let's say you follow the news and you're like, oh. And so then you let your opinion get in the way of price and volume. You would have missed all of this. You know, same thing like we talked about with AI. You know? If you're like, oh, it's stupid. I saw the AI gymnastics videos and it sucks. Because it does, right? Those gymnastic videos are pathetic. And a lot of the AI stuff has been like subpar or whatever, but, you know. So let's say for these people that are saying, okay, so AI is a bubble, right? And how long have we been hearing these calls? I mean, God. For a year we've been hearing this. It's a bubble, it's crap. Right, so if I'm going to make an opinion and make a call on something, you know, the majority of the time I'm going to have money on it, one way or the other. And for the people that don't, their opinion means absolutely nothing. And for people who have money on it, their opinion means almost nothing, but not quite nothing, but for people who don't, you know, like analysts or whatever, I mean, it might as well be negative nothing. Like, it's so insignificant. I can't even describe how insignificant it actually is. You know, so all these people that are saying it's bullshit, what are they? Are they short here? And if they are short, they should be completely out of business. But are they? No, they're not. So they don't have money in it. You know, so you know, it doesn't matter. You're like the opinion. I heard a great great analogy where, you know, when I place a trade, I expect something to happen. You know, and that's it. You know, so I place a trade, I expect something to happen. I expect the price to go up or down or stay the same, right? You know, but something will happen. And that's it. Anyways, I'm rambling. The plan for tomorrow is Q's Dow. I would love for Dow to start working. That'd be cool because, again, I mean, you know, so with options market, it doesn't really price in much volatility. So when you do get moves happening, it's pretty sweet. Devin. Where would I buy here? I guess I've missed these last couple days. See, that's why these videos are fantastic. Yeah, I'd be a little patient here, to be honest. I would be patient. 47.20. Let's put a reminder right here. And then copper. Yeah, look at that after hours. Sweet. Where am I going to get into copper? I don't know. You guys, I don't know. I don't know. Mm-mm. Maybe add in the strength right here. 27.59. Alright, that's it. 27.59, you have a whole gap to fill up to here. This will be a shorter trade if it is placed. Alright, later guys. I'm out of here. Bedtime.